If you're a real estate investor looking to put together your first syndication or your 10th, then this next episode is for you. My guest, Bruce Petersen, who has amassed a portfolio of over 1,100 units and raised over $30 million. He's going to share with us a few tips that's going to help us explode our business this year. More of his story and some of his tips coming up.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello and welcome back to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today we have Bruce, the Apartment Guy Petersen. Bruce is a multifamily real estate syndicator, as well as the author of Syndicating is a BITCH and Other Truths You Haven't Been Told. Bruce, thank you so much for joining us on the show and welcome.
Thanks for having me, man. Look, if you're offended by that word, no. This is going to be interesting. I'll try to keep it clean for you.
No, it's perfectly fine. So I kind of wanted, I was trying not to chuckle to myself, but yeah, it's a very interesting title. It definitely got our attention here. We want to learn more about that, especially your background and experience with doing so many deals and raising so much capital. So I really appreciate you and look forward to kind of picking your brain. But before we kick things off, we can kind of go through your background, how you got started in real estate.
Yeah. So, I came from a very poor upbringing. I say that, we were poor for a time, and then my mom met my stepdad and things got a little better. We were kind of middle class at that point, but, grew up in the projects, honestly. $35 a month in rent, parents, both college, high school dropouts. So no privilege there at all. I got out of high school barely. I got into college and then realized this is not working for me. I was not cut out for college in that formal environment, so I dropped out of college. So parents are high school dropouts. At least I got to college, but then I dropped out of college. I was a stockbroker in the early 90s. I did that for maybe a year. Then the market fell apart. We went to war, and I think it was 91, Desert Storm. And I had to find something else to do because I wasn't making any money. I was pure commission, and it was within my first year. So there was not much open to me with no degree, with no advanced education. So I fell into retail, did that for 18 years, maybe 19 years. And, I told myself I loved it because I thought I did. And I guess at the beginning, I kind of did. I like to work hard. And in retail, you work your ass off. Well, if you're good at it, there are slackers in retail, just like other professions. But, I worked my ass off. I literally, not figuratively, but I literally ran everywhere I went. I climbed the ladder pretty quickly, and I did really well for myself in retail. And I got my own store. I was running big box retail stores for large companies. And I ran my own store for 5 to 7 years. And I was probably next in line to be promoted to district manager. But I hit a wall of the last year working 100 to 110-hour weeks often. I just couldn't do it anymore. I burned myself out. I got to where I hated my job. I definitely hated my life. Had no family. It was all work. I would get off, 10, 11 o'clock at night after going in at 6. I would stop, go through a drive-through, get a double cheeseburger and a large fry and a large Coke, and sit down on my couch and watch TV until I finished eating that, and then pass out on the couch, wake up in the morning, shower, and go do it again. So, I'm 5'8". I was 240 pounds, overweight, unhealthy, actually depressed. And I thought, shit, I got to make a change. This is not going to work because I'm going to physically kill myself. I'm not going to take my life, but this was going to end my life prematurely because I was in terrible shape. So I quit, put my stuff in storage, drove around the eastern half of the U.S. for a month and a half, tried to clear my brain, and then came back. Bought a house with cash because I listened to Dave Ramsey. And then I learned that was really stupid. So I found a mentor to teach me how to invest in real estate. And they explained to me why I should not have done that with my house. So sold my house and started investing in real estate with the help of my mentor and coach. And, the rest has been history. I bought my first deal in 2012, 48 unit. Did really well with that, and have since syndicated a total of 6 deals. And all I've ever done in real estate investing is buy apartment complexes. But not only that, I've only syndicated deals. I've never bought anything on my own. I've never bought a single family rent home in my life. So I've only done multifamily my whole life.
Wow, that's a really amazing story. Like I was reading through your website and kind of getting a glimpse, so I can kind of get prepared for this interview, and didn't realize how deep it actually was. Where you kind of had that upbringing, which makes it all the sweeter with all the success that you have, and then you're able to, along the way, be able to kind of teach others the same. And many of the people that we have on the show, they kind of attest so greatly to mentors and coaches to help them either curve the gap or to learn things, and in your way, just instead of the traditional way of buying a single family rental or go fix and flip and house hacking, you went straight to the big stuff. And a lot of people that I talk to and that listen to the show are also looking to do the same thing. So I understand you wrote the book, Syndication. What kind of gave you that motivation to write the book, and what are some things that we can learn from it?
Well, the reason I felt I needed to rewrite the book, and that sounds goofy and cheesy and whatever, but I felt I had to write the book. I wasn't doing it to get clients, to get investors. I've mentored people for years on how to do this. Now, I don't do it anymore. I just don't have the bandwidth and the time, unfortunately, but I really enjoyed it. But I started noticing that people were coming out of these events, these weekend events where people were, all rah, Tony Robbins style on stage and hooping and hollering and high fiving everybody. And anybody can do this. I'll make you rich yesterday. And, they would parade across their students on stage, and nothing they were saying was factually untrue. Everything they were pitching was accurate. You could do what they said. There's no question you can. Hell, I've done it. But they only give you the highlights. They make it, they give you the rainbows and the lollipops and unicorns, and that's all they're talking to you about. Now, they may have to keep themselves straight within the law and say, past results are no indication of future performance, that kind of stuff. But they're going to say it really fast and move straight ahead from it. Mm-hmm. They're going to bring up their students, and their students are going to tell you how perfect everything has been and how this system that they were taught, man, this is great. I couldn't have done it without them. I'm great. I agree that you probably could have done it without them, but there's a lot that's going to go wrong if you do this, especially if you do multiple deals. Shit's going to happen. Mm-hmm. And you don't hear that on stage. You give somebody $20,000 to $40,000 of your money to teach you how to syndicate properties. And then about, 3 to 6 or maybe even 12 months in, you go, oh my God, this is a lot harder than they made it sound. Again, I don't think they're lying to you, but they're glossing over it. Mm-hmm. So I wanted to write the book to pull the curtain back. Not to, I'm not trying to monetize the book, because you're not going to make a lot of money writing a book. And if you want to write a book to make a lot of money, I got news for you. Probably going to happen, right? I make $200 to $300 a month. That's it. So I'm not making much off of it. But it was so important for me to try to save people from writing those $20,000 and $30,000 checks when their emotions are high and get swept up into the fervor of that event, only to realize, I don't really want to do this. It's a lot harder, a lot more stressful, and a lot more liability than I understood. Mm-hmm. So I'm going to give you stories about some of the stuff that I've gone through. I'm just going to bare my soul. But I'm also going to teach you how to do a syndication from beginning to end, with everybody you need on your team, when you should bring them into your team, what you should expect to pay those professionals, a timeline for closing a deal, for due diligence. I'm going to give you everything. But I'm going to give you scary stories along the way and say, look, if you're still with me, great, let's keep going. If you decided this isn't for you, then the book has been a success. I maybe saved you from writing that $20,000 to $30,000 check to regret it later.
Yeah, I like that, especially like so you hiring a mentor and a coach that able to kind of guide you in the proper way so you can avoid those mistakes. You're doing the exact same thing with the book. So instead of course, everyone kind of knows the benefits of syndication. You can work with a sponsor, raise funds, put a deal together. So I guess let's start backwards and start with the potential hurdles. And I know there's probably many of them, but maybe some that can come to the top of your head that is probably the most important that people should be aware of.
So one thing I don't know that people really think about, I get asked all the time, people are wanting to get involved. So Bruce, obviously I'm going to find a deal, then I go find the money, right? No, it doesn't work that way. almost without exception, you can't do it that way, or you're going to get yourself in trouble with the law. You're going to break SEC regulations. Now, there are ways to get around that depending on how you file your offering with the SEC, but most people in their first deal are going to file it in a way that they can have millionaires and non-millionaires, basically accredited investors and non-accredited. If you file that way, because you don't know enough rich people yet, you're just getting started, fine. But if you get a deal under contract and then you start sending it out to people, you're going to run out of people really fast that you know. Then you got to raise the balance of that money. Well, if you filed it as a 506B, so you can bring in non-accredited, non-rich people, you can't just offer it to a stranger on the street or somebody that you met at a meetup. You're not allowed to do that. It's against the law. So you have to start with the money first. Raise the money, then go out and find a deal that you can put that money into. Where I'm going with this is what a lot of people don't understand is when I do a syndication, I might not have to put any of my own money into a deal because I'm raising money. First of all, that's really hard. You have no track record. You have no experience. Most people are going to insist on seeing your co-investment in the deal or not going to give you money. But even if you do co-invest, you do put in your own money in the deal. Really, the way this is supposed to work, or maybe should work, in my opinion, there are a lot of upfront fees that you're going to have to pay that should come out of your back pocket, right? So you're going to have to write an earnest money check to the title company to get that property under contract. And then it's typically going to be 1%. There are variations, but it's typically 1%. So let's say you're buying $1 million property. You're going to have to come up with $10,000 in earnest money. That's going to sit at the title company. Then you're going to do a syndication. So you're going to pay upfront for your syndication attorney, your PPM attorney, to draw up the documents for you. That's another $8,000 to $15,000 or $20,000. Then you have due diligence inspections that you're going to have to pay for out of pocket. There's all kinds of stuff that you should be fronting. Now, once the deal closes, all of the money's raised and the offering is closed as well, well, then you will submit invoices and get reimbursed because those are truly company expenses. But if you don't close on that deal, you're out a lot of money. And I don't think people get that. That let's say, Bruce, I'm going to terminate, within my due diligence period, so I'll get all my earnest money back. Well, you're right. Your due diligence inspections are paid for and gone. Your PPM attorney, your syndication attorney, that's paid for and gone. So it's still potentially going to be $10,000 to $20,000 that just disappeared. You don't get it back. They did the job for you. They did, they performed the duty for you. So you owe them the money because you didn't close it. It's not their fault. So I think that's a big gotcha for a lot of people. Because if you get into a deal that doesn't work out and you think, I found some stuff I didn't anticipate and the deal doesn't work now, I got to get out. Again, the sunk cost, that's gone. So there is real risk in doing what you're doing financially.
Absolutely. And you had mentioned regarding kind of where people mostly say you find a deal and the investors will come. And you're saying, focus on getting the money and then get the deal second. So can kind of talk about the importance of building relationships. And of course, a lot of things with 506B and C, you have to have these pre-existing relationships. Can you kind of talk about some steps that you talk to your students in the past, or things that you talk about in the book as far as kind of getting established, you can be able to start building rapport with investors and eventually get them into a deal with you?
So the biggest thing is, first of all, you got to get out and meet people. You got to go everywhere. And right now, maybe not go everywhere, but you got to go to all the Facebook meetup groups and, everything you can get to kind of insert yourself into the local scene or even a national scene now that there's Facebook and a lot of virtual stuff going on. But you got to get out. You got to mix and mingle with people. You've got to meet people and let them know what you're trying to do. You have to tell people that, look, I'm a syndicator. Well, what do you own? I don't own anything yet, but I'm working on my first deal. So you have to get out there and just meet people, let them know what you're up to, but practice your elevator pitch, right? You don't have any history yet, but you still have to convey confidence in people when you're trying to talk to them about, if I find a deal that works for you, I might send it. How much you're looking to invest. Now, that comes after you've established a relationship. So the beginning of it, you're going to meet somebody at a meetup and they're going to say, hey, Bruce, what do you do? Well, I'm a syndicator. Well, what do you do, Fred? Well, I'm looking to invest in multifamily syndications. Well, okay, great. Well, how's that going for you? it's going well, but hey, can I get on your list? Absolutely. Here's my business card. Have them reach out to you in an email. And so you're establishing the basically the trail to show that they made first contact with you.
Right.
Once they do that, you're going to say, hey, thanks for showing interest in what it is I'm doing. If I do find a deal that fits, how much are you thinking about investing first time out? You have to ask that. We're all taught don't talk about money, or most of us are taught don't talk about money. If you don't talk about money, you're going to get screwed up. You
Mm-hmm.
got to know how much is potentially raisable. So if you think the first deal I'm going to do is, say, a 10-unit property, and let's say that 10-unit property is going to run me $1 million, that $1 million property is going to probably take you $300,000 to $400,000 to get closed. So I think you should raise 2 to 3 times that need. So
Mm-hmm.
if you think you need 300,000, you better raise 600 to 900,000, call it $1 million, because I promise you, at least half of your list, especially first time out, they're going to get cold feet. They're going to have something come up that makes them not able to invest, or they're going to have invested their money before you got back to them with the deal. So you need to over raise. But again, basics are walk into that meetup, or on YouTube, on Zoom, whatever you're doing.
Mm-hmm.
Know what it is you're looking for. Practice that speech. I'm looking for a 40 to 60 unit property built sometime in the 80s, maybe early 90s. I'm looking in Austin. I'm looking in Nashville. I'm looking in Alabama, wherever. Have all this stuff identified in your brain. If you don't know how to come up with those answers, well, then you need to be working with a coach.
Mm-hmm.
And people that think, oh, it's a scam, it's all bullshit, it's all, man, I get lit up on social all the time. You're a scam artist. Like, look, dude, go back to your life, serving slushies to somebody at 7-Eleven,
Mm-hmm.
whatever. You should have somebody in your corner, but ask them. Ask somebody with experience. How do I figure out what it is that I'm looking for? Right. So I knew that going in. I would walk into events and I had it down pat. I knew exactly what I was looking for. Don't lie. Don't exaggerate your experience. Don't tell them that you're looking for a 400,000 unit property when you're looking for a 5 unit property.
Mm-hmm.
But have it ready to go. Be confident, but don't be arrogant.
Absolutely. And then as far as kind of your advice, because for some newer syndicators who don't have a track record, who don't want to be on the active side, maybe they're in a market like I am in Connecticut, where it's just not a really good investable state. And then, a lot of the good deals are in like Florida and Texas and then maybe your market as well. And you want to partner up with a person that has experience, maybe a mentor or coach or someone that you trust. And then you bring in your part of the capital, your relationships. Can you kind of talk about possibly doing it on that angle and the importance of building relationships with people that you want to, JV with or potentially work with?
Right. So everything's relationship, right? Like you said, and it goes back to the same thing. You got to get out and mix and mingle. And a lot of people are not going to want to invest in your deal. A lot of people are doing deals like you are. Well, you start talking to people and you'd be surprised how many people are looking for partners, because
Yep.
they either don't have the time, or they don't have the balance sheet, or they don't have the capital, or they don't have the deal flow, or they don't know how to underwrite. Figure out what part of that equation you can fill, because you have to contribute equally. Well, maybe not equally, but you have to give something to have value for yourself.
Mm-hmm.
But you'll find people looking to partner. And if you can match up with somebody that doesn't have what you have and they have what you don't have, it works all day. But again, you got to make sure you do it right, first of all. Joint ventures work. They're very difficult. Partnerships are very difficult if it's a true partnership where everybody has a say at the table. A syndication is nice because it's a security, almost
Mm-hmm.
always. So security means that there's going to be one person or one group that's responsible for the day-to-day operations and the profitability of the project. So if you are in a true partnership, there's probably going to be more than one person at the table that has input. You get yourself locked up, you can't come to a consensus, you can't move forward. So I'm not saying they can't work. They're very, very difficult. But if you find somebody that you do have a good working relationship with, and especially somebody that, again, you kind of fit together well,
Mm-hmm.
because you each have different skill sets and different things that you can bring to the table, it can work very, very well. And a lot of people are doing that. You just got to be careful. Make sure that when you form these multi-headed GPs, general partnerships, you got to be legal. You got to do it the right way within the law, You have to make sure that everybody has a legitimate role. If you just pay somebody to bring you dollars, you're going to get screwed up
Exactly.
because
Yeah.
in most cases, that's against the law as well,
Mm-hmm.
right? So there are new legislation being passed. There's new rules and regulations within the SEC that govern who can raise money for who. So things are changing. They're getting easier, right? There are finders now that the SEC has created in their regulations. So it's easier now, but just make sure, like anything, make sure you understand what you're doing. Again, this is where a coach and a good attorney will keep you straight, and you have to listen to those people. When I was mentoring people, I would tell them, go do this. Well, no, that doesn't sound right. I want to go do that. Well, why did you pay me $20,000? You paid me a lot of damn money. Well, again, going back to my analogy, well, I was the best Slurpee maker in the history of 7-Eleven. I know what no, you don't, or you wouldn't have paid me any money. Listen to your coach. Listen to your mentor. They will keep you straight, and listen to your attorney to make sure you do it the right way.
Mm-hmm. Yeah, and that's one thing I said, like kind of referencing back to your book, where you're bringing the stories, good and bad, to kind of show people that if you end up not following, like I said, coach's advice, or especially your attorney, that are really familiar with these laws and how to do it right, you can get yourself in a lot of hot water. Not only burn relationships, but land yourself in jail as well. So you want to make sure that you take the proper steps, and just keep educating yourself, and like I said, just learn from people that have done it before, like yourself. So I really
Right.
appreciate you sharing that.
And not only, find somebody that, you kind of plug each other's gaps, if you will. When you find that person, don't get all overexcited. Don't be an A personality and just charge ahead. You damn well better vet that person, because you're
Mm-hmm.
going to be in business with them. That could be a multi-million-dollar business. If you
Mm-hmm.
get into business with a crook, if you get into business with somebody that has a very checkered past, this could go really badly for you. So
Mm-hmm.
don't just assume you met somebody at a Bigger Pockets event or a Jake and Gino event, or wherever you go. Most of the
Mm-hmm.
people you're going to meet are going to be fantastic, and those are both great organizations. But just because somebody's a student of some group, or they have a profile in Bigger Pockets, doesn't mean they're good or bad.
Mm-hmm.
You have to figure out who these people are. You need to run background checks, and I truly mean that. If you're
Mm-hmm.
going to be in business with somebody, I'm not talking about a silent investor, a limited partner if you're the general, or the general if you're a limited. But if you're going to be in the GP with somebody else, I want to run a background check on you. If you don't want to submit to that, hey, that's totally fine. Go find somebody else.
Mm-hmm.
I got to make sure I'm protecting my ass. If I get into trouble because I got into a deal with a bad person, that could take me down. If
Mm-hmm.
nothing else, it's going to harm my reputation.
Right.
And when you're raising money at 20 to 100 to $200,000 at a chunk, your reputation is all you have. So
Mm-hmm.
you got to protect it fiercely.
Absolutely. Yeah, very, very awesome tips. So yeah, so we got kind of covered that, and just want to kind of get your general comment on regarding 2021. I know you're really heavily involved in the multifamily sector. Just for the people who are just kind of listening to kind of learn more about where they see that asset class faring out heading into the next year.
Well, best I can tell, right? Nobody really knows for sure, but everybody I listen to, talk to, and kind of share information with, I think it's going to be a good year. I think cap rates have the real potential to continue to compress, because people that were investing in retail, they were investing in hospitality, things like that. A lot of that traditional retail and hospitality has gone belly up,
Mm-hmm.
or they're struggling for damn sure. So they're looking for a safe haven to put their money into. So
Yeah.
the returns might not be as good as they were when retail was really cranking, or a restaurant was really cranking. But, with that going down, now they're looking for safety. They're looking to preserve their capital, but still with some upside. So a lot of people are going to keep coming into multifamily, which is going to keep driving cap rates down. Interest rates are at historical lows, but we've heard that for 10 years, but they just keep going lower.
Mm-hmm.
But cap rates keep going down. So I really believe that valuations will continue to go up, which is making buying a little trickier. You really got to make sure that you're stress testing deals when you're underwriting. Don't just think that, oh, well, cap rates will continue to go down in the future. They may for the next 2 or 3 years, but they may not. We think they will, but we don't know for sure. you have to stress test.
Mm-hmm.
Make sure that if cap rates do go up a full point or what's called 100 basis points, your deal works. If your deal only works if cap rates compress, if they go from a 4 or a 5 cap to a 3 or a 4 cap, that's the only way the deal works. I don't think you should be doing the deal because that might not play itself out. So, big picture, I think multifamily is going to be strong. I think it's going to be fine. Collections are starting to go back up for those that had them dip. So things are getting better. I think they will continue to get better. I think, office, I think retail and restaurant and the right format will still do well. Industrial doing fantastically well. Warehouse space is, in super high demand because everything went to online ordering. So they have to have a place to warehouse all this crap. So it's not just multifamily. I think there are a lot of niches within commercial real estate that are still doing well or are going to rebound very, very well because everybody thinks, well, nobody's going to go back to the office. That's not true. It is absolutely not true. Now, some companies, some industries, they will decide it's more efficient and they're more nimble if everybody works from home. But they're starting to also understand that, okay, I might save some money on a lease expense, but there's a huge value to having your employees sit next to each other and collaborate in real time. There is so much lost in Zoom calls that they're starting to understand that. So most people we're talking to, right? Because I'm involved in the true commercial space too. And we're hearing people say that, look, as soon as it's practical, we're coming back. I'm bringing all my people back into the office because I'm losing lots of connections. People don't feel connected to their coworkers. And again, the collaborative experience is not the same as it was. So I think most of this is going to come back. It might look different, but I think retail, I think restaurants, and I think office are going to be fine. But multifamily is probably the most stable of the bunch.
Absolutely. Yeah, that's really good points there. Appreciate you sharing that. Awesome. So just kind of learn a little bit about you. I know you kind of went through your background and your upbringing and all this stuff that you're working on now. But can you take us through a typical workday for you, and do you in particular have any special morning routines?
So a work day for me, I'm the Hal Elrod guy, had dinner with him a couple times and picked his brain. And, he lives here in Austin. So I'm very fortunate. Lots of cool people live here. I'm not one of those cool people, but I get to hang out with some cool people every once in a while. But, so I try to ascribe to that the best I can for what works for me. So I wake up very early. I usually try to get out of bed by 5 or 5:30. I walk into my office at the house and I try to read, 20 to 40 pages every morning. Then I'll journal. Then I do some kind of an active exercise. So I'll get out moving. I'm a cheese ball, right? Tony Robbins. I don't know if you know what a rebounder is, or if anybody listening knows what a rebounder is. It's a mini trampoline. I have one right here in my office. I rebound. If I can't get out and go to the gym, if I can't get out and go for a run or for a walk, well, at least I'll rebound. So I try to get my blood flowing. So I try to have time to myself for the first couple of hours in the morning. Then I settle into work, start digging through emails. And right now, especially with COVID, I'm working out of the house a lot, but, I keep myself pretty strict. I try to turn things off as I'm writing because I'm writing a lot of articles. I'm creating a lot of educational content, but then I'm also raising money. So I try to carve out time throughout the day for those specific tasks. And when it's something that really requires my focus and attention, I'll try to turn off my phone the best I can. Sometimes I can't because I got to be very available, especially in a cash raise situation. But that's really my day. I try to bracket and bucket things very well, but I guard my mornings for myself.
Awesome. And it's between, communicating with potential investors, and your sponsors, and of course, doing different things. Any tools or resources that you use to help you manage your day and make you more productive?
I'm not the biggest tech and techie, nerdy kind of tech guy. I use stuff for the longest time until I got to about 300 or 400 units, maybe 500 units. I was just using Gmail. I wasn't using MailChimp. I wasn't using any of that stuff. I was just using Gmail and it worked. But then you get to a point where you realize, oh, I outstripped Gmail. Gmail will only allow me to send 99 emails. Well, an email to 99 contacts at a time. Above that, they think it's spam, so they will block it. So they won't let you send it. So with size, I brought in some other things. I've created an investor portal on the Invest Next platform. So that's been, I don't want to say game changing, that's hyperbolic, but that has been a big deal for us. We use an actual CRM outside of that as well to, keep track of all of our investors, all of our leads, right? Prospective investors, we're at like over 15,000 people now. So I need something robust to be able to track all that and keep up with it and be able to communicate effectively with people. So we do that. I'm not a big Slack guy or a Teams guy. I don't do any of that stuff. We do a lot of video conferencing. I don't do much Zoom. I do a lot of Google Meet, because they have a video conferencing thing. So my biggest thing is the portal and the CRM, but they're expensive. They're not for a lot of people, especially getting started. I pay $1,500 a month to InvestNext to run my portal for me. But it's a big deal. If you're getting started, $1,500 a month is a lot, but those are probably the two biggest things that we utilize.
Awesome. And then finally, I always ask all my guests, is something that our listeners always come to expect. And then you being a big Hal Elrod fan and friend, we talk about gratitude. So what can you say that you're most grateful for?
Well, okay, let me clarify. I don't know if we're friends. We're friendly. I don't want to overstate my connection to him. He's a phenomenal man. We've had really good conversations, but it might be saying a little to say I'm friends with him. But so what'd you say? What motivates? What would you say?
Oh, what are you most grateful for?
Okay. Well, what am I most grateful for? For the life I live. I lived a life for almost 20 years of working for other people in a job that I hated, which is what, unfortunately, I think the vast majority of the nation is doing. So I'm grateful for the freedom of schedule, right? I got more work. I have more work and more demands on my time than I've ever had, even when I was working 100 hours a week in retail. But it's doing stuff that I like. And I get to decide how much time I allot to this or to that. If I'm dealing with somebody, this is going to sound harsh, but if I'm dealing with somebody that I think is just a jackass, I don't have to deal with you. I choose to deal with the people I choose to deal with. If you're negative, if you're hateful, if you're vitriolic, leave me alone. I walk away from you. When you work for other people, you don't really have that benefit. So,
good point.
Outside of the obvious answer, right? The easy answer is the family. Of course, I'm very thankful for my family, but it's really for what real estate has enabled me to do and to accomplish. A lot of people think, oh, you're all about money. It's all money. No, it's not. It has nothing to do with money. Money is the byproduct of the stuff that I do. But the world works on money. It runs on money. The more money I make, the more money I have, the more cool stuff I can do, the better quality of life I have for me and my family. But also, the more I'm able to give back, the more people I'm able to help, the more I can afford to take a break from syndicating. We're still syndicating, but maybe not have to go find the next 14 deals because I got to do that to survive and put food on my table. I can take a break and work on education. I've got a complete online educational platform now, streetversity.com. Well, I've got time to deal with that now, So again, syndication has done for me things that I never, ever thought possible. So that's the biggest thing I'm grateful for.
Awesome. And then, of course, we'll make sure to have all your information so people can get in contact. But what's the best way to get in contact with you?
Best thing is probably, I would say Instagram, apt.guy. That is my Instagram handle. That or LinkedIn, which is just apartment-guy, or the website apartment-guy.com. The website will kind of give you an idea as to what we're up to, show the education if you're interested in any way. If you're not, totally fine. You'll see some of the deals we're working on. You'll get information at a high level about the book. So that's probably my best resource.
Awesome. Bruce, it was a pleasure speaking with you. Like I said, picking your brain and learning more about you and your story, and be able to help us become better syndicators. Continued success into heading towards 2021. To the best of you and the family, and look forward to connecting with you again soon.
Thanks again, Dwaine. I really appreciate you having me on. I really had a good time.
Absolutely. Thank you so much. All right, take care, my friend. Hey there, this is Dwaine Clarke, your host of the Wealth Through Real Estate Investing Show. I want to thank you again for tuning in and hope you're enjoying this valuable content. While I got you for a quick minute, I wanted to send you an invitation to join our growing investor community. It's called the Passive Investors Club. It's a group of like-minded individuals like you who are seeking financial freedom and to build true wealth through passive investing in commercial real estate. We take a totally different approach to investing that is opposite, that is pushed by the financial advisors and what we see in the mainstream media. We like to invest in real assets that we can touch and understand and that are not subject to the wild swings of the financial markets. We don't want to be part of the herd who pursues the traditional route, leaving our financial future to Wall Street. So if you're interested in joining our group and to sharing resources and opportunities, then go to passiveinvestorsclub.com/join. Joining the club is completely free and there's no obligation. And all our members receive our free Passive Investors course along with tons of resources and content. So again, passiveinvestorsclub.com/join.